Good evening, everyone.
Good evening, sir.
Good evening.
Good evening, sir.
Good evening,
Jai
Vivek.
Shri
Evening, sir.
Krishna.
Good evening, sir.
Good evening.
Good evening, sir.
Hello, good evening.
Good evening, sir.
Good evening. Good evening. So, did you revise the video today or yesterday?
Yes, sir.
Yes, sir.
Yes, sir.
Yes, sir.
So, whenever you have any doubt or any question regarding any of the classes, you have been given a separate WhatsApp number. You can send your queries through text message or through a voice message on that WhatsApp number, and I will reply. Right. So that's what means the reason to give you a separate WhatsApp number is I don't want to make this class a mess by asking the same questions repeatedly by everyone. So better is to that you will be able to keep your privacy as well as your all the questions will be answered.
Vivek ji, at the same time, will there be any separate Q&A session?
Yeah, there will be separate Q&A session on the last day so that everything would be cleared. And even see, till that time, all of you can ask all the questions on that WhatsApp number.
Right.
Right. So don't keep your questions till the last session. You can keep on asking your questions on that WhatsApp number that has been given to you. Right. So don't need to keep your questions with you till that time. Right. So one question
Okay,
with
sure,
you
sir.
will hold other answers as well. So all the questions should be clear. All the doubts should be clear. Right. So let's start today's session, and we will be discussing 3 strategies. Those are very useful, and let me tell you, we don't need a lot of strategies to make money in the market. So it's a myth that if we know a lot of strategies, we will be able to make more money. It's not like that. Even if we could use 1 or 2 strategies throughout the life with discipline, with blessings, with hard work, we can make means crores of rupees, 100 crore, 200 crore. There is no limit. It depends on how much life we do have ahead. So if we have 10 years, if we have 20 years, if we have 30 years, 40 years, 50 years, it will make a difference. So to make more money in the market, we need to have more number of years, right? To make more money in the market, we need to have more number of years. This is much more important. So I can explain you this particular thing with an example. For example, let me increase the size. Yes. So if we are if we are investing 1 lakh rupees today, say for example, this is in crore, 1 crore rupees today, and we are making 20%, right? And we are trading for 20 years. So this money is 38 crore, right? This money is 38 crore. Dhyan se samajhna, please understand this. And second, if we make not 20%, or if we don't have 1 crore rupees, if we have 50 lakh rupees, say for example, 0.50, and rather than to trade for 20 years, we do trade for 25 years, just by increasing 5 more years and keeping the money half, then we can make more money than we were making when we were investing 1 crore rupees. And moreover, if we are investing same 1 crore rupees, and rather than to make 20%, we are making 18%, and we are increasing the number of years by, say, for example, 2 more years, and we are getting the results. So this is the same return. You got my point? So if we are making not 18%, but 15%, and we are increasing number of years, then we are getting almost the same result. Almost the same result. It doesn't make too much difference. So more percentage every time is not the only criteria to make more money. We need to have more number of years to trade. Got it. So if we have less money to invest today, right now, we need to invest for a few more years. And if we are getting a little bit less return, and we are investing for more number of years, still we can make the same number, means same amount of gain, same amount of portfolio. So it's not, what is with Warren Buffett? How Warren Buffett has been able to make such a big portfolio even when his annual CAGR is only 19%. He is one of the richest men in the world with just only 19% CAGR. Only 19. I'm not saying that we will not be able to make 35-40% CAGR. We will be able, but if in any particular year our return is less, then it should not be a reason to worry about. Right? All the years will not be same in the market. All the weeks will not be same in the market, and all the decades also will not be same in the market. It will fluctuate. It's not fixed deposit. It will not have the same rate of return. We will not have the same rate of return every year. So it will vary. And in stock market, you can note it down as well. There are 4 things, those are in our control. There are 4 things, those are in our control. Number 1, to find a good business, to find a good sector, to find a good industry that will grow from here for next 15-20 years. As I told you, that a business that is having a very low penetration, and that is bound to increase from here now. So to find a good business is in our control. This is in our control, to find a good business. Right? Second thing, to find a good company in that business, to find a market leading company in that business, that is also in our control. I will request everyone to please note it down. These are the basics of the market. So to find a good business, that is in our control. To find a market leading company that will grow with the growth in that sector, that is also in our control. For example, per capita income of Indians is $2,000, and America's per capita income is almost $74,000. So on an average, every American is 35 times richer than us. This is 35 times on an average. And on an average, a Chinese is 5 times richer than us. China's per capita income is almost $10,000. And this is expected that Indians per capita income will be $20,000 in next 25 years. So 10 times, on an average 10 times from now. So we are going to have a very golden period. 2 decades of full of bull market. Each and every time there will be knee-jerk reactions, there will be a shallow growth, there will be a bear turn also, downtrend also, but all of these will be buying opportunities only. Nothing means there's nothing to worry. It will not happen as it has happened in Japan. In last 30 years, there have not been any growth. Japanese market has not made any lifetime high since last 30 years. It's a long period. Why? Because the population is dying there. Youth are not willing to have kids anymore. They are not interested. So there are different reasons, but in India, the scenario is totally different. Right? So 2 things, those I explained you. 1, to find a good business. 2, to find a good company in that business. And 3rd, to buy that at a right price based on technical analysis. This is also in our control. To decide the buying price, that is also in our control. So when to buy, it becomes important once we find out a good business and once we select the right company in that business. It becomes important to buy at the right price. If we buy at a very high level, then might be, if even if this is a good company, still 2 years will pass on and we won't make any money. Right? So even if this is a great company like HDFC Bank, and if we are not using technical analysis or chart patterns or strategies, we won't make money. So to decide when to buy, this is in our hand, and simultaneously when to sell, this is also in our control. to decide the right selling price, the target, based on the technical analysis, of course, again. So these four things are absolutely in our control. Two things, those are not in our control. Please note it down. One, the market volatility, the fluctuation in the market. This is not in our control at all. This is not in our control. Second, the holding period. Some stocks will take 3-4 months to hit the target, and few stocks will take 2 years to hit the target. Few stocks will start moving up immediately after our buying, and few stocks will start moving down immediately after our buying, and that will check our patience, and it will capture our mind, basically. And it will raise a question whether we are on the right track or not. So we need to focus only on first four things to find a good business which has a low penetration, and based on our general understanding, that business is going to grow in future, and in future means at least for next 10 years. So if we understand that this business is going to increase, but only for 2 years, we should not invest in that. We must have a good growth future prospect for next 10 years at least. Right? And second, to find out a good business. And third, good business means two parameters. One, that should be the market leading company, and second, the fundamentals of the company should be good based on the financial analysis. So there might be a company that is a market leading company, but the fundamentals, financials are not good of that company. So we should not go for that. For example, Bharti Airtel. So Bharti Airtel is the market leading company in telecom. We know that. However, the balance sheet is not good. For example, Tata Motors is a market leading company in automobile sector, but financials of that Tata Motors are not good. So we need to take care of both the things. We need to take care of both the things means the company should be the market leading company, one of the biggest company in that field, and second, the financials of that company should be sound. That should be strong. And we will understand, we will have a fourth session only on financial analysis, fundamental analysis, fourth session. This is the second session today. And fourth session will be completely for fundamentals, and we will understand each and everything that what is needed to be know and what is useless thing, because there are a lot of things, those are just accounting entries and we don't need to understand them. As a business owner, as a business analyst, we don't need to become a chartered accountant to be successful in the stock market. We don't need that. So, and this is a mistake being done by a lot of people. They try to understand each and everything that is written in the balance sheet, whereas each and everything is not important. Right? So we will learn that. So these two things, those are not in our control. Basically, we are bothering about only these two things every day. The market volatility means why, Vivek bhai, this stock is going down? Why this stock is going up? So if the stock is going up and that is not in our portfolio, we are getting worried. And if the stock is going down and that is in our portfolio, we are getting worried. Whereas the movement, the fluctuation, the volatility in stock price is the basic nature of that stock. This is the basic nature of the stock market. It will move. And we cannot think or we cannot wish even that after buying, the stock should start moving up, and after selling, the stock should start moving down, because this is also a wish of ours sometimes. Vivek bhai, we had exited from this stock at 200, but it has reached to 300 now. So I think I sold very early, whereas we had sold on the right target. So what we assume and what we wish for, that just after selling, the company should become the worst company and it should start coming down. And just after buying, the company should become the best company and it should start moving up. Whereas our goal is not to make any company good or bad. Our goal is to make a good, sound, significant return from the stock trading. So stock trading is basically like running a shop. Every day we will not get the same number of customers. Every day we will not make the same amount of money, right? We don't know when a customer will come. There's no time. And we don't know which stock, which product will be sold on any particular day. So we need to be very disciplined while running a shop, that if I have bought some product at 100 rupees and my wish is to make a 20% profit on every product, then we must know that when I have bought this product at 100, I need to sell it at 120, right? We cannot think, okay, I will decide when the customer will come. I will try to read his face, whether he will be paying 200 or 300 or 150 or 70. It should not be like that. We should be having a predetermined price, that at this price I will sell because my buying price is this. And we must follow this practice for a long number of years. So stock market trading is just like a business. A business of trading means the business which is a shop. And we must have the quality products on our shop, so that if there is no customer for next 30 days, still my product should remain a good product. And we must make sure that somehow when the market will open again, a customer will come and this product will be sold at a profit. Right? So that's why we will try only to trade in V40 and V40 next companies. We will try to trade only in V40 and V40 next companies, because these 80 companies are the best companies. Right? So on the last session, I will tell you exactly how to go ahead and which strategy should be applied and which group we should work upon. So that will be the last thing to decide when we will have the last session. But now let's move for the first strategy, that is based on simple moving average. So the name of the strategy is simple moving average strategy. Simple moving average strategy. That is the name of the strategy. Right? So there are different kind of moving averages, but the most simple is the simple moving average. One is exponential, one is weighted average, one is something else. So we don't need to go in all other moving averages. We just need to stick with the simple moving average. So we will be using three moving averages here. Number one, 200-day moving average. Number two, 50-day moving average. And number three, 20-day moving average. Please note it down. 200-day moving average, 50-day moving average, and 20-day moving average. Whenever I'll be speaking moving average, I will be speaking simple moving average. Right? So this is by default. And we will use this strategy only on V40 companies. Please keep on writing the conditions. We will use this strategy only on V40 companies. Not even on V40 next. Only on V40 companies. And we will be giving black color to 200-day moving average. So please note it down. We need to write black in front of 200-day moving average. 50-day moving average will be having red color, and 20-day moving average will have green color. So we will have this thing in uniformity, so that whenever you ask a question or you share any screenshot of any chart, I could understand that which moving average is black and which is red and which is green. Right? Every time whenever we will do technical analysis or we will use any strategy, we will always use daily candlestick chart. This is 1-day candlestick chart, daily candlestick chart. So when we are on the chart here, for example, so this one candle is of 1 day. And this chart need not to be selected from the bottom, like 1 day, 5 day, 1 month, 3 month. Rather, we will be selecting this from the top daily. It need to be selected from the top only, right? So this 1 day means this one candle is of 1 day. Every time we will be using daily candlestick chart only. There is no stop loss in this strategy. There is no stop loss in this strategy. So 1 day selection means here one candle could be of 1 second, 5 seconds, 10 seconds, 1 minute, 3 minutes, 1 hour, 2 hour. We will be selecting 1 day candle. Right? And there is no stop loss. In one trade, in one stock, we will be investing 3% of the total portfolio. In one stock, one trade, we will invest 3% of the total portfolio. So for example, we have 10 lakh rupees. So 3% is 30,000 rupees. We will invest 30,000 rupees in one stock, in one trade. Right? Based on this strategy, we will not average anything. We will not take the second trade based on the same strategy to average the price. There is no averaging. For example, if first trade we have taken at 100 rupees and the price come down to 90, should we invest more? Based on this strategy, no. Only one trade. Okay? Only one trade. Now, we are plotting the moving average on the chart. I'm going to the indicators. I selected. I'm typing simple. So there is one moving average indicator like simple moving average bracket. In bracket, we have 50, 100.200. And this is written by cinematograph. So by default, basically, if we select the normal one, we will get only one moving average. But by selecting this, we will have three moving averages. Right? We need to have three moving averages, 200, 50, and 20. But here he has selected different one. So we'll go to the settings. We will go to the settings of SMA. Here is the setting. The first one we will make 20. Second one we will make 50. And third one we will keep 200. Now we will go to the style. The first one we will make green. We will darken the color, and thickness we will keep the normal one, first one. Second, we will make it red, dark, thickness is less, and black for 200. So settings are done and okay. So we have three moving averages now. For example, HDFC Bank, because this is applicable only on V40 companies, right? So black color is of 200-day moving average, red color is of 50-day moving average, and green color is of 20-day moving average. You got it? What you need to do if you are not comfortable with the settings, you just need to watch the video again, pause it, and keeping the same settings in your laptop. So that is easy, right? So here three indicators we have taken: 200-day moving average, 50-day moving average, and 20-day moving average. 200-day moving average is having black color, 50-day moving average has red color, and 20-day moving average has green color. Right? When will we buy? We will buy when 200-day moving average is on the top. Please note it down. Buying conditions are black color is on the top. means 200-day moving average is on the top. Then 50-day moving average is below that. On the top 200, then 50, then 20. And closing price is on the lowest level. And closing price is on the lowest level. Right? So these are the buying conditions. 200-day moving average is on the top. 50-day moving average is below 200-day moving average. 20-day moving average is below 200 and 50-day moving average. And on the lowest level, that should be the closing price. Closing price for the day. Okay. We will take the example here on the chart. Don't worry. We will see few examples. And selling conditions are, we will sell when 200-day moving average is on the bottom. When 200-day moving average is on the bottom. 50-day moving average is above the 200-day moving average. And 20-day moving average is above the 50-day moving average. And closing price is on the top. When these conditions will be met, we will sell. So this is very simple strategy, and by using this, by implementing this strategy, we will keep on making money throughout the life. Throughout the life, I'm saying. It will never fail. It will never fail. So buying conditions are when 200-day moving average is on the top, 50 is below 200, 20 is below 50, and closing price is below 20-day moving average. Right? And selling is at the bottom 200, above 250, above 50, 20, and on the top, this is the closing price. Means just opposite of buying conditions. Just opposite of that. Right? So for example, we have taken the chart of HDFC Bank, and in HDFC Bank, when this stock met the same conditions, all these conditions, it's here, right? So black color is on the top. If you see, black color is on the top, red is on second number, green is on the third number, and closing price is on the fourth number. So this is the buying price. This is the buying condition. We must have bought it here at the time of closing or at the time of next day in the morning itself, because we must be having a look at the closing price. So we might be analyzing this after market hours. So next day in the morning, we will be buying, and next day in the morning, we will be selling after meeting the selling conditions, right? After meeting the buying conditions, we will buy next day in the morning, and after meeting the selling conditions, we will sell next day in the morning. So if we buy it here, so when we will be selling it, still selling conditions have not been met so far, but it met here. If you see, at this level, black color is on the bottom, means 200-day moving average is on the bottom. 50-day moving average is above the 200-day moving average, and 20-day moving average is above the 50-day moving average, and closing price is on the top, right? So we must have bought it next day in the morning here, and we must have sold next day in the morning. So during this period, as such, only 4% was made in 7 months. Why that is so? Because sometimes market has been in such a bad mood. We all know in last 12 months, market has not given any return. since October last year, market has been only in the downtrend, but still we have been able to make at least equivalent to fixed deposit. But before that, let's see when these conditions were met. The buying conditions, here the buying condition was met. Black on the top, then red, then green, then closing price, right? And selling conditions were met here. When black is on the bottom, then red, then green, then closing price, right? So we bought next day in the morning and we sold next day in the morning. So we made 41% gain in 204 days. So sometimes there will be big return, sometimes there will be less return. So here we got 41% gain in less than 7 months. Before that, let's see. Here the condition was met. On the top black, then red, then green, then closing price. And here the selling conditions were met. Black on the bottom, then red, then green, then closing price. We bought next day in the morning and we sold next day in the morning. We made 7% gain in just 47 days. Before that, let's see. Here the conditions were not met. Here we got the buying opportunity at this level. Black on the top, then red, then green, then closing price, and selling opportunity is on 11th May 2016. So next day morning we bought and next day morning we sold. We made 16.81% gain in just 3 months. Right, before this, let's see. We got the opportunity here. And we got the selling opportunity here. Next day in the morning bought and next day in the morning sold. So we made almost 9.5% gain in 4 months. And so on. Means this is such a nice strategy that whenever you will apply, it will give us at least some gains. And this gain is not a small gain. So this opportunity here, next day in the morning we bought and next day in the morning we sold. So 2.5 months, 17.77% gain. Let's say one more example of V40 company, say for example, Bajaj Finserv. So there was the buying opportunity here and selling opportunity here. Next day in the morning, bought and next day in the morning, sold. So 131 days, 17% gain. Before this, we bought it here and we sold it here. We made almost 65% gain in just 5 months. The beauty of this strategy is it will never let you buy at a higher level. It will always get you a stock at a very reasonable price. We bought and sold. We bought next in the morning and we sold next in the morning. We made 18% gain in just 1 month, 36 days. Here there was no opportunity. We are going back. Here we got the opportunity. We bought it here and we sold it here. Right, next in the morning we bought and next in the morning we sold. So 3 months, 28.45% gain. So you got means while trading only in the great companies, still we are able to make significant return. And there is no risk because we are trading in best of the best companies, in the market leading companies, always. Right. Sometimes there will be a period when 20% or 25% will not be made in a trade, but that is the basic nature, right? That is the basic nature of the market. So we have seen the example of HDFC Bank when recently we made only 3%, 3.5%, whereas during the same period we made 28, 29% in Bajaj Finance, right? So it will always happen. Now, what is the rationale behind it? We need to understand the operator's mindset, why this strategy is working. So if we have read some book, there is how many stocks means we have 40 stocks in V40 companies. So I think you have not gone through day before yesterday's class. We are applying this strategy only on V40 companies, and V40 company is a group of companies where we have 40 companies, right? And the list has been shared with you in the group as well, in WhatsApp group, right? Yeah. So 200-day moving average means what? 200-day moving average means the average price of last 200 trading sessions. And during means while calculating this average, we are taking the closing price of last 200-day trading sessions. So this is the average price. So 50-day moving average means what? The average price of last 50 days. 20-day moving average means what? The average price of last 20 days. So why this average price is important? Say for example, there is a residential society, and in that residential society we have 400 flats or 500 flats, and the average price of the flat is 2 crore rupees, right? So but somehow if someone sells a flat because of the emergency, because of some urgent reasons, at a cost of 1.8 crore rupees or at a price of 1.7, it doesn't mean the real price is 1.7, because it has been the exception. And in the same manner, if someone has been able to sell his flat at a price of 2.5 crore rupees, means instead of 2 crore rupees, that is the average price, it doesn't mean the price is 2.5 now, right? So because every day stock price is moving up and down, it doesn't mean the ultimate peak or ultimate bottom is the real price. That's why we are considering, okay, what is the average price of this stock? So that's why we are taking the average price from 3 point of view, 200, 50 and 20. So we are taking the average price of all the traders basically. So 200-day moving average means 10 months average price, because in 1 month there are on an average 20 trading sessions. 10 days market is closed, either on Saturday, Sunday, or on the occasion of some holidays. And 50-day moving average means this is the average price of 2.5 months. And 20-day moving average means this is the average price of 1 month. So because traders are divided in different categories, 10 months means long-term traders, and 2.5 months means medium-term traders, and 1 month means short-term traders. So when a stock price is trading below 200-day moving average and 50-day moving average and 20-day moving average, it means long-term traders are in loss on an average, mid-term traders are in loss on an average, and short-term traders are also in loss on an average at current level, right? It does mean that. So when every trader is in loss, in these great companies, it means this is the most pessimistic situation for this stock currently. Means the external events are so pessimistic that stock has been down and every trader is in loss currently. And this is the best time to pick that ultimate good stock. When everybody is pessimistic, everybody is in loss, means this is almost at the bottom. It can go further down, of course, but this is available at a very cheap price now. So this is the best time to buy a good company when everybody is pessimistic and everybody is in loss. And on the contrary, when the stock price is trading above 200-day moving average, above 50-day moving average, and above 20-day moving average, means long-term traders are in gain on an average, mid-term traders are in gain on an average, and short-term traders are also in gain on an average. It means this is the most optimistic situation for this good company currently. And this is the best time to exit when everybody is optimistic. So this is based on the simple thesis. So when all these traders are in loss, generally long-term investors come to buy this at this level. Long-term investors, because these long-term investors are only buying and holding for the lifetime. They are not selling. For example, pension funds, for example, sovereign funds, right? So they want this company to be bought only at a very fair price, at a lower price. So whenever there is a pessimistic situation and every trader is in loss, these investors start buying this and this stock stop falling further down. So we are having these big size investors working in our support when every trader is in loss, when the situations are pessimistic. You got it? So in books, basically just opposite is written. There is one rule that is called the golden cross. Golden cross means when 50-day moving average is going above 200-day moving average and price is trading above that, we should buy. Whereas what we are doing, we are selling. We are selling. One rule is that is called the death cross. Death cross means when 50-day moving average is going below 200-day moving average and price is below that. Book says, death cross says that we should sell that stock. And what we are doing, we are buying. So in my early days, when I was reading a lot of books, I started doing back testing whether death cross is working or not and golden cross is working or not. So I was getting the dicey results. Sometimes I was making on back testing itself. I was making money. Sometimes I was losing money. So nothing was being made. So I thought when by following death cross, ultimately I am losing money. So let's just do the opposite of it and do the back testing. And the results were fantastic. So all these books are not telling the truth actually. We need to be very careful when we are applying any knowledge written in any of the books. Those are teaching us stock market. There is no book that is complete. There is no book that is complete. And few books are just written just opposite of what is actually working in the stock market. Just opposite. So we need to be very disciplined. We need to keep on trading based on the learned strategies, and we will keep on making money. Sometimes we will make less money, 15%, 20% in a year, sometimes only 10% in a year, but very next year, we will make 40, 50, 60%. So on an average, we will keep on making money. Always remember, the holding period is not in our control. The volatility is not in our control. Every trade is not going to be the same trade. These will be different trades. So this is one strategy. Don't try to apply this strategy on outside V40 stocks, because these long-term investors are coming to buy only in the great companies, not in the mediocre companies, and not in the small companies. Right? No averaging, because we don't know at what level we should average. And the holding period can be very long. For example, ITC. If we were averaging in ITC, we were averaging only. And opportunity in other stocks, we were missing about. So we should not average. Even if one or two trades are taking more time, that is absolutely okay. We don't know how long this downtrend can go. Right? Second strategy. We are moving to the second strategy now. Three percent of the portfolio should be monthly or what? 3% of the means portfolio is not monthly or yearly. Portfolio is the portfolio. Means the amount, the money you have to invest in your in stock trading, that is the amount. That is not monthly, yearly, or daily. That is the absolute amount. So sometimes it can happen that we don't have a good money right now, right? So if we don't have any money now and we are starting investing on monthly basis, and if we have decided to invest 20,000 rupees on monthly basis, so in that case, 3% of 20,000 is a very, very small amount, right? So in this case, what we will do, we will not invest less than 10,000 in one stock. Please note it down. We will not invest less than 10,000 in one stock. And we can keep on noting down these questions. At the end of the session today itself, for half an hour, we will have a Q&A so that all these questions could be resolved today itself. Right? Second strategy. Knoxville. Rob Booker, Knoxville. Let me tell you the name. We are going to the indicator. I am typing KNOXVILLE. Rob Booker, Knoxville, divergence. Rob Booker, Knoxville, divergence. I clicked on this and it will look like the long lines. Rob Booker divergence, Knoxville divergence, KNOXVILLE. Right? This is again very simple strategy. See, if a strategy is simple, then it can be used for the lifetime. But if the strategy is complex, it will be very difficult to implement. The simple is better. You can note it down. We are not here to become a hero. We are here just to make money. Right? Very simple. Anupam Kher has never become a hero, but he has done most of the Hindi movies. Johnny Lever has never tried to become a hero, but he has been appeared in more than 200, 300 movies, like Kader Khan. Right? So in the same way, we don't need to become a hero in stock market. We don't need to know each and everything. We just need to know few things. Those are working and we can make money by using them. Right? For example, if a doctor is eyes specialist, then that doctor need not to have any knowledge about the ENT, ear, nose, and throat. Or he don't need to become a cancer specialist or heart specialist or mind specialist or gynecologist or pediatrician. Right? And a pediatrician doesn't need to become the heart surgeon. In the same manner, there are more than 200, 300, 500 ways to make money in the stock market. We just need to know few of them, but exactly in the same manner as these would work. And we just need to repeat it continuously. So if someone is running a shop of medical, means a chemist shop, and during normal season, people are not getting sick, and he's not able to sell a lot of medicines, he should not about to close the shop and start running a restaurant, because the restaurant is working fine those days. Right? And when there is a rainy season and people are not going to restaurant, that restaurant owner should not think about to running a shop of umbrellas, because people are buying umbrella that time. So in the same manner, few strategies will have tough time, few strategies will have a good time. every time. We just need to keep on trading based on the learned strategies. We don't need to learn a lot of new strategies, not at all. As I have shared few strategies recently on YouTube, a lot of my previous students are asking, Vivek, bhai, which strategy to use now? Those taught in the classes or those you are teaching on YouTube for free? I am saying those taught on the classes. The strategies, those I have taught in the classes, are the premium one. And that's why I'm charging some amount for that. Right? So don't get confused with the daily videos. We just need to keep on trading what we are learning in the classes. We can upgrade our knowledge. We can upgrade our knowledge by watching daily YouTube videos, but it doesn't mean that you start, you stop using what we have learned in the classes and you start using what you are learning in the YouTube videos. It doesn't mean that. We have to use the knowledge what we are getting in the class here, right? So this Knoxville strategy will be applicable again only on V40 companies. Knoxville strategy will be used only on V40 companies. And there is no stop loss. There is no stop loss. Right? We can average if the second trade is below 5% from the first trade. We can average if the second trade is below 5% from the first trade. There is no stop loss. And we will invest 3% of the total portfolio in one trade. So while averaging, 3% plus 3% means total 6% can be invested in one stock. Right? So there are a lot of things to go through. The by default settings are, means we'll go to the settings of Knoxville. We'll go to the input. Bars back, by default is 150. We will be changing it to 200. Please note it down. In settings, in input, bars back, by default are 150. We will be changing it to 200. RSI period is 21. We will change it to 14. And momentum period is 20. We will keep it same. Bars back 200, RSI period 14, and momentum period 20. We'll go to the style. We will change the color to blue. And okay. So it will look like this. It will look like this. So there is a difference between moving average lines and Knoxville lines. Knoxville lines are straight lines. They are not curvy like moving average. Because moving average is being built up every day along with the new candle that is running with the candle. Knoxville lines are not appearing every day. These are the straight lines from here to here directly connected. 180 degree means the straight lines, just straight, no curve. There are two kinds of lines, one that is in the downtrend and second that is in the uptrend. So for example, here these are two lines. We can see these are two lines connecting from here to here and then connecting from here to here. There is a curve. Here there is a joint. These are two lines starting from here to here, and then second line is starting again from the ending point. So there are two lines, one that is in the uptrend, second that is in the downtrend, right? Uptrend line is connecting from the top to the top of another candle, and downtrend line is connecting from the bottom of one candle to the bottom of another candle. Please note it down. Uptrend lines are connecting top to the top, and downtrend lines are connecting bottom to the bottom. Right? These lines can be of any size. These lines can be of any size. For example, this line is a very small line and this is a long line. This is a very long line. The size of the line doesn't make any difference. These lines could be of any size, and the size of the line doesn't make any difference. It has no relevance. The size of the line is not relevant. Right? So these lines are connecting on 2 points, the starting point and end point. Right? From the top to the top and from the bottom to the bottom. Right? These lines are not being made on daily basis, but suddenly appearing when starting point and end point are available. When the conditions are being met and these lines are finding starting point and end point, these lines are appearing suddenly, immediately. So for example, there is a boy, there is a girl, and we are talking about the marriage. And boy said, okay, I am ready. And girl said, I need 7 days. So till the time girl doesn't agree, we can't say marriage is fixed. Right? Even though 7 days have happened. And when both the parties will be agreeing, immediately marriage will be fixed. And before that, even though we were talking for last 1 month, there was no fixing. So in the same way, when starting point and end point both are getting agreed on the basis of conditions, the line is appearing suddenly, immediately. And the starting point is not important. Please note it down. Starting point is not important. And in the same manner, when we had started talking about the marriage, it is not important. When we have agreed upon, that is important. So starting point is not important. So 2-3 things are not important. One, the starting point. Second, the size of the candle. These 2 things are not important. Only end point is important. So when we are going to buy at the end point of downtrend line, buying point is the end point of downtrending line. Please note it down. Buying point is the end point of downtrending line. And selling point is the end point of uptrending line. So this is also going to be very easy. Again, let me tell you, making money in the stock market is only about implementing few steps. making money in the stock market is only about implementing few steps. That's it. But to run a YouTube channel about stock market, we need to know a lot of things. Seriously, because we need to have a new topic every day. But to make money in the stock market is seriously about taking these 6 sessions class. That's it, for lifetime. Now, when we are means checking this on the chart, let's say the same example of Bajaj Finance. Because these lines we need to consider at the end of the day. So we will be buying next day in the morning. Please note it down. We will be buying next day in the morning and we will be selling next day in the morning. We will buy next day in the morning. We will sell next day in the morning. Next day in the morning means at the time of opening. 9:15 is the best time. Right? So we must have bought it here next day in the morning. Here. And the selling point is this, next day in the morning. Why? Because this is the ending point of this line. If there are multiple points, then we will be selling at the first end point of the uptrending lines. The first end point of the uptrending line, if there are multiple lines. Because when end point is also confirmed, then this line will appear. Right? And all other lines will be appearing later on. So as and when we see first uptrending line, we will be selling it. Because this uptrending line will not start when the starting point will be available. No. When end point will also be available, then only we will be able to see this uptrending line. You got it? Right? So we will be selling at the first end point of uptrending line. There are two lines, but on this particular date, try to understand, on this particular date, on 17th of August, there was only one line, this one, and this particular line was not available. Got it? So that's why. So we will be selling next day. So how much money was made? Next day in the morning and next day in the morning. 59 days, 37.63% gain. For your information, I'm always trading in V40 companies. And moving average strategy and Knoxville strategy is the simplest way. And always working. Always working. Right? Otherwise, how will we come to know that we should buy here and we should sell here if we don't have any technical analysis? Right? One more point. We must have bought here and second trade is here because the first trade is here and second trade is here. We can average. So on the second trade, we made 37.63% in 59 days. But on the first trade, we made 14.47% in 240 days. Because the second trade is more than 5% below. That's why we are taking the second trade as well. So you got it, how to average? Right? We are going back. We got one opportunity here. So we bought it here. And where is the first end point in all these lines? The first end point is here. The first end point in these uptrending lines is this one. So we bought next day in the morning and we sold next day in the morning. So 42% gain in 122 days. Right? Before that, there are two trades here. One and two. Why two trades? Because there is a joint. First line is from here to here. And second line is from here to here. Right? Because these lines are straight lines. These are not curvy lines. They don't have any curve. These lines cannot bend. So first trade would have been taken on the next day, right? And second trade would have been taken on the next day. However, we will take the second trade only if second trade is 5% below than the first trade. Let's see. This is 11% below. There is a gap of 11%. So we can take the second trade. Every time whenever we are averaging, we must make sure that second trade is at least giving us 5% extra. At least. So we took the second trade, and selling point for both of these trades is the same first end point on the uptrending line. This one. Right? So on the first trade, we made 61% gain in 146 days. And on the second trade, we made 85% gain in 95 days. And see the beauty that this is the time of pandemic. It allowed us only to buy at the bottom. This is the beauty of both these strategies, that it will never let us buy on the top. Never ever. If we go back, we would have bought here. So here, if we take the example, there are two trades, and the second trade is not down by more than 5% from the first trade. There is a gap of only 2.25%. So we will not average here on the second indication. This is clear, right? So we must have taken only one trade. And where is the end point? First end point. First end point is here. We must have bought on the next day in the morning, and next day in the morning we must have sold 84% gain in 203 days. So there is nothing to lose, and there is a good amount of money to make. There is nothing to lose. Why there is nothing to lose? Because these are the great companies. Right? Different companies, different time, we will get different results in different time frame. There is no symmetry. We cannot say that at least 20% money is made within this period of time. Means there is nothing like this. But on an average, I can say on yearly basis, we do get between 30 to 40% gain. Right? All of the questions relating to this, please keep on hold. We will have the Q&A session. Then we will answer. Right? There is one more strategy we will be learning. But before going to the third strategy, let's have a break of 5 minutes so that these two strategies get settled in our mind. Otherwise, everything will get mixed up. Okay? So this is 9:10 now. We will meet at 9:50, 9:60. Right? Yeah. The third strategy again is a very simple strategy. Third strategy name is V20 strategy. V20. V for victory 20. And this V20 strategy is applicable on V40, V40 next, and V200. V20 strategy is applicable on V40 companies, V40 next companies, and V200 companies. In all three group of companies. Again, here also we will be using daily candlestick chart. There is no stop loss. And we can average. For averaging again, in this case, for averaging, there should be a gap of at least 10%. In earlier strategy, there must have been a gap of 5%. But in case of V20 strategy, there should be a gap of at least 10%. 10% gap from first trade to the second trade. Second trade should be lower by at least 10% from the first trade. Right? 3% will be invested in one stock, one trade. This is also again a very simple strategy having only 4 steps. So listen carefully. There should be a bunch of green candles. There should be a bunch of green candles, all green candles. And the movement from the bottom to the top should be more than 20%. Right? So there should be a bunch of all green candles consistently. All green candles. And the movement from the bottom to the top should be more than 20%. So these bunch of candle could be one candle of 20%. These could be 2 candles. These could be 3 candles, 4 candles, 5 candles. But all should be green candles. If there is a red candle in between, then this is void. There should not be any red candle in between. 20% or more. The movement of these green candles from the bottom of any of the green candles to the top of any of the green candles should be 20% or more. Or we can say more than 20%. Right? So for example, Bajaj Holding there are 5 green candles consistently. 1, 2, 3, 4, and 5. We can see that these 5 green candles. So what is the bottom of these 5 green candles? This one. And what is the top of these 5 green candles? This one. So we can see the top is of the 4th candle, not of the 5th candle. So when I'm saying the top among these all green candles, it could be the last candle, it could be the second last candle, it could be the first candle itself. So the top to bottom, the movement should be of more than 20%. So if we calculate this movement is 32.95%. We can see, right? So we need to find out, the first step is to find out a bunch of candles, a bunch of all green candles combined together. The movement should be more than 20% or 20%. 20% or more. Right? Second step is to create the range. To create the range from the bottom to the top, as I have created. For understanding all the tools of trading view, I think I have shared the videos on the WhatsApp group, right? You just need to go through that. So first step is to find out a bunch of green candles that is having a movement of more than 20%. Second step is to create the range at the bottom and at the top. And third step is we will be buying when the price will come down to touch the lower level. And we will be selling when the price will go back to the upper level. This is so simple. So we must have bought it here. And when is the selling price? Selling is when this is hitting the upper line. Right? So we bought it here and sold it here. This is 33.19% gain in 125 days. You got it? Now, for example, again, I think we have got a bunch of few green candles. This is the top and this is the bottom. And let's check if this movement is 20% or more. Again, this is 25%, 26%. So 2 steps have been completed. Means we have found out a bunch of all green candles, no red candle in between. And second is to having the lower line and upper line, means to create the range. Now, what is the third step? Third step is when the price will come back at the lower level, we will buy. And after touching the lower level, when it will go back to the upper level, we will sell. But here, because so far the price has not come down to the lower level, this is under process and we have not bought. However, what we need to do, we just need to keep on finding these movements and we must place this upper line and lower line. We must create the range so that whenever price come down, we could come to know immediately. Right? For example, Bajaj Auto. I think there is a movement of 20% or more. These lines, no, this is 17%. This is also not. I think this one. Yes, 20.83%. How many candles are there? 1, 2, 3, 4, 5, 6, 7, 8. 8 green candles, no red candle in between. And from the bottom to the top of these green candles, the movement is 20.83%. So we have created a range. We have found out the bunch of green candles having a movement of more than 20%. We will buy when the price will come down to lower line. And we will sell when it will go back to the upper line. Right? So we made, again, of course, 20.91% in 63 days. For example, right now, angel broking, angel 1, this is a movement of more than 20%. Right? We must have bought here. And after waiting, we must have sold here. So even though it took some time, but still making 23-24% gain in 5 months is not a bad idea. The price has come down a lot. So when the price has come down after our buying, we must remember the volatility is not in our control. It could be volatile. And when it completed this selling point, please have a look at the chart. After completing the second point, there was one more movement of more than 20%. Right? Price came down again. We must have bought it here. And the selling point is just completed yesterday, means on Friday. Just completed on Friday. So we made, again in 5 months, 30% gain. Otherwise, how will we come to know that when to buy this angel 1 and when to sell? Right? So making money in a stock market has never been difficult. We just need to be connected with the right people, with the God's grace, blessings. We need to stop trying to learn each and everything. We should never try to become a professor here, that we must need to know each and everything. No, we just need to know how to make money. We are not here to become a hero. We will become automatically a hero when we will be making a lot of money. Right? We need to have a wisdom. Wisdom to consistently keep on trading based on just few strategies. The first most important criteria is to trade only in the company where we have conviction, where we have confidence, based on the business and based on the financials. Because finding the buying point is just a matter of 5 minutes, 10 minutes. But we need to have a conviction whether this business is going to grow and if this company is the market leading company of that business or not. So as we understand that stockbroking business is going to grow. Right now, only 2-3% people are trading. But in US, this number is 60% plus. Right? So a lot more people will be trading, and Angel One is one of the prominent leader, a prominent player in the market. And financially, the net profit is growing every quarter. Net profit is growing every quarter. And this company is the part of V200 companies. This company is the part of V200. How? Let's check on screener.in. Angel One. How much is the ROCE? This is 35%, right? And net profit, 685 crore. And debt equity ratio, 1.61. This is acceptable because this is a NBFC. How this is NBFC? Because they are giving loan for margin trading facility. And they are charging interest. Right? So even though they are not bank, but they are giving loan to earn interest. So that's why they are NBFC. They are not registered as NBFC, but by nature they are NBFC. And in case of NBFC, we have only two conditions, that net profit during last 12 months should be more than 200 crore and return on equity should be more than 10%. And in this case, the net profit is 685 crore and return on equity is 46%. So it should become the part of V200 companies. So sometimes what we need to do, even after having a list of V200 companies, at the time of taking the trade, we must understand if this company is good one or another company is good one, because we will be having more opportunities and less amount to trade. So always go with the better one. Because even if something happened wrong due to external events, due to external reasons, we could stay with the trade because we are invested in good companies. You got it? Now, these were the simple example of V20 strategy. We will take an example where we will be averaging the stock, averaging the trade, right? Because we can average also on the basis of V20. So for example, there is a trade that is IRCTC. Again, if we see the financials of IRCTC, the profit is more than 200 crore and ROCE is 51% and debt equity ratio is less than 25%. So this is meeting the conditions of V200 companies. These are the three conditions of V200 companies, right? Do you remember that? Profit in last 12 months more than 200 crore, debt equity ratio is less than 25% and ROCE is more than 20%. 20 or 15? 20%, right? Yes. So while going to IRCTC, if we check here, for example, from the initial time when it had listed, so there was first 20% movement, 32% movement of these four green candles combined together. But the price didn't come down and it went up. If the price is not coming down on the lower line, we will not take the trade. Right? After that, there was another movement of 20% or more, 24%. But before the price came down, it went up again and there was another movement of 20%. And again a movement of 20%. No, this not this one, but this one. Right? But here this time before price moved up, it came down. It came down on the lower line of this range, this particular range. Right? So if we do change the color of these lines, we will be able to understand this, segregate this. Right? So this is a different range, this is a different range, and this one is a different range. Price came down, we took the trade here. And before hitting the target, the price came down at the lower line of the second range. So the first trade we took here and second trade we took here. and third trade we took here. So in the case of V20 strategy, we can take maximum 3 trades. So one original trade, then second, and then third. So total 9% will be invested. And because 9% will be invested of the total portfolio, 3% plus 3% plus 3%, then we need to make ourselves sure whether this company is a good company or not. Even though this is meeting the market, means this is meeting the V200 company's conditions, still we will be analyzing, we will be asking ourselves whether we are comfortable to invest if there is a need to average out 9% in one stock or not. IRCT is a monopoly. IRCT is a monopoly business. And railway track is being improved. We are launching a new more trains. This is government company, but still being government company, have a look at the ROCE. This is 51%. Right? And in case of V200 companies, there is no criteria of not choosing the government company. That criteria is only in the V40 and V40 next. In V200, there is no such condition. In V200, there are only 3 conditions, right? So we bought it here, first trade, second trade, third trade, and we will be booking the profit on the upper line of the same range based on which we had bought. Please remember, we will not be waiting till the top. The buying and selling will be done within the same range. So there are 3 different ranges. If we have bought something on the third range, then we will be selling on the upper line of the same range. We will not be waiting till the top. As we had done in the case of Knoxville, we were buying, but we were selling on the top only. Here we will be using different range for buying and selling. Second trade, we bought it here. We will be selling on the upper line of the same range. From red line to the red line. Right? And the third trade, from the same red line, same black line to the upper line of the same range. You got it? The first range. Now, one more thing here to understand is, we took this first trade, second trade, and third trade, but here first trade, we exited from this first trade after taking the profit. So we have now 2 trades. 2 trades are left. So if one more opportunity comes, then we can take third trade again, because we can keep 3 trades at a time. Got it? So here we got one more opportunity going forward. If this is not 20%, this is 20%. Right? So we got third trade here. Again, one more trade on the lower line of this range. Got it? On the lower line of this blue range. And we booked profit here on the upper line of this blue range. So we made almost 27% in 52 days. You are getting this point, right? Because we were having only 2 trades available. So we were in a position to take one more trade, because we can have 3 trades at a time. So when we got one more opportunity, we took this trade as well. Again, there was one more opportunity after exiting from here. Opportunity of taking one more trade, because this is 23% again. Let's make it of different color, green color. So this is green range. We must have bought it here at the lower line of this green range and booking profit on the upper line of this green range. So again, there was a gain. 56 days, 24% gain, and so on. It will keep on happening like this. We just need to be disciplined. Did you get it? So things are not difficult. Keeping the mind stable is difficult. And why that is difficult? Because we are watching a lot of reels. We are watching a lot of YouTube. We do need to check only when we will have something to invest. We don't need to check charts every day. We need to check charts only when we have booked profit in some trades. If 100% money is invested and there is no money available to invest anymore, then we don't need to have a look at the charts. Right? And in case of V20, because the target level is already known, then we can place the GTT order. Because in case of V20, we will be buying during the market hours. This is not on the basis of closing price. As and when the price will hit the lower line of the range, we will buy. And as and when the price will hit the upper line of the range, we will sell, even if this is during the intraday. So in this case, GTT order will help us. We don't need to track. We just need to place the GTT order. And how to place the GTT order, I have shared one video in the WhatsApp group. So today, we had to learn these three strategies, and we can talk about all the questions relating to what we have learned so far, means day before yesterday and today. Anyone can raise the hand and ask the question. Yes, please. You can unmute yourself and ask. Yes.
Yeah. Hello.
Yes, Sobi.
Hi, Vivek. So as I mean, I have seen your video in YouTube also. So recently you said this is not a good time for large cap, good time for small cap and medium cap, right? Middle cap. So suppose I am fully invested in large cap, and when I see the charts and I find a good opportunity in some mid cap or small cap from V40, V40 next and V200. So suppose I have small profit from that large cap. Should I exit from that large cap and invested where I am seeing a better opportunity?
See, this is a question that how to start with. After completing all these sessions, how to start. So what we need to do, after completing all the sessions, we need to apply all these strategies on all the stocks that we have in our portfolio.
Okay.
So there will be three scenarios. Scenario number one, if the strategy is being applicable on any of the stocks, so that stock either will be in profit or loss. So we will exit where the strategy is applicable at the target price. So when strategy is applicable, we know the target price as well. We know when to exit. We will be exiting at the target. And if no strategy is applicable, then stock may be in profit and stock may be in loss. So if no strategy is applicable, we will be exiting from the stocks where we are in profit. The stock is in profit and no strategy is being applicable, so we will exit from that immediately.
Understood.
Right. Now the third situation, the strategy is not applicable and stock is in loss. Because we are going to see a good bull run going forward for next 2 years, then there is no need to sell anything in loss. We will be waiting for the buying price. And as and when it will be hitting our buying price, we will exit. because there is no strategy applicable.
Okay. There can be one fourth case where I am invested that is giving little less margin than the other one. In that case, what is your suggestion?
If the strategy is applicable, then we will be exiting at the target price. And if the
Okay.
strategy is not applicable, then if the stock is in profit, we will exit, even though this is a minor profit.
Okay.
And because we don't know when to exit.
Yeah.
No strategy applicability means we don't know when to exit.
Correct.
So we will exit immediately if that is in profit, and if that is in loss, then we will wait for the
Wait for time.
buying price.
Yes.
Yes, sir, please.
Another question I have that is I have conviction for PNB. Okay. PNB stock, and basis on your last class, we know that operators generally do the changes in the price. Now in PNB, if I see the contribution, contribution of
Shobhik, we will be
yeah.
asking the questions that is on the learning that we have learned today, and it means day before
No,
yesterday.
yeah, this is basis on yesterday's learning only.
Okay.
So operators change the prices, right?
Yes.
Now in PNB, operators contribution is very less. All are in either promoters or general public. So in that case, how the price will go up if it goes up?
See, operators doesn't mean only those are having more than 1%. Sometimes because 1% in case of PNB is more than 400 crore. Because this is 40,000 crore rupees of company. So if operators are working in a group and 10 people are controlling, having 300 crore rupees, so in total they have 3,000 crore rupees of shares, but they are not appearing in the list because all of them have less than 1%.
Got it.
So the people, those are lying under retail investors, could also be operator.
Okay.
Right?
Understood.
Yes. Yes.
Good evening, Vivek.
Yes.
Good evening, sir.
Yes.
When we are trying to download this free version, that is TradingView, free download, it gives a message saying that is it safe to download free download version?
See, TradingView is 100% safe, sir. You can go anymore. Means there is no risk.
No risk, no?
No risk.
Because it was giving some warning. I thought I'll just check with
No.
you.
TradingView is perfectly a safe website and safe application to work with. Yes.
Thank
Vivek,
you.
you just now gave example of 3 trades
Yes, bhai.
in which we bought the share at the highest price and then averaged them twice at lower prices. And when we exited, obviously the FIFO will be applicable and the last stock, the first stock will be sold first.
Yeah. So in that case, what will happen when we
So-
will exit from all these stocks? Our profit will be matching with the profit of our trading account. So in that case, we need
I understand.
yes, we need to track it separately in a notebook or in an Excel
Correct.
sheet.
Okay.
Yes, we need to track it
Okay.
separately.
That is what I wanted to know, because in our average price, it will appear as a loss.
Yes,
Otherwise,
yes, that will appear on the temporary basis.
on the temporary.
We will be
Yeah.
exiting from all the stocks.
So we need to maintain a separate Excel sheet. for
Excel
it.
sheets. Yes, sir. Yes, sir.
Can we keep 3 separate accounts for this strategy? V20.
See, having 3 separate account will create an issue, because if we need to average and if we don't need to average, so means why to make it complicated? There is no need. There is no need for that. So I will be taking the questions. Those have raised hands in the emoji symbol, means reaction.
Yeah.
Okay. Yes, Vignesh bhai, please.
Yes, bye. Very good evening to you. First of all, can you give some example for the three strategies for tomorrow?
Yes, so I will share few charts where currently we have buying opportunity based on these 3 strategies. I will share few charts.
Yeah, because paper trading means we can check tomorrow.
Yes, definitely. I will share few charts in the morning itself so that you can take trades.
Okay, thank you.
Thank you. Lakshya bhai, yes, please.
Hello, Vivek.
So I wanted to know the relation between the, like in V20, you told that about consistently green candles and the difference in the lower candle and the upper candle should be 20% or more. So I wanted to know, like, what is the logic between, first of all, the consistency, and secondly, why not 15? It can be 19 also. Why it is 20? Like, what is the logic you developed then?
Right.
Yeah.
So we need to have someone to support our trade every time. Here, when price is moving consistently by more than 20%, this cannot be done by the retail investors. It can only be done by the operators. None of the retail investor can take the prices 20% higher in a single shot consistently without bringing it down. So this is an absolute act of the operator, that some operator is active in that stock and that operator is taking the prices higher. And because of the uncertain reasons, sometimes uncontrollable situations, the price is coming down at the same level where the operator had started buying this stock. So he will be buying more. And even if he want to exit on an average, or he want to exit from his stocks at the buying price itself, at least the top level will be touched again.
Okay, got it. Thank you.
Right. So operator is involved.
Okay, so what we mean, like operator is taking it up by, operator and retail investors both are taking it up to 20%, and then due to some reasons which are
Price
not,
can retrace.
yeah,
So the same operator will start taking it higher once again.
okay,
Right? Yeah.
like a follow-up question. I'm really sorry. Like what is the, like, certain, like, I know the volatility is something which is not in our control, but like on what logic is this certainty built that anytime that the price drops, it will go up to that level again? Like obviously
It
in a
will
growth
go up to
market,
that level again because we are applying this strategy in good company that is consistently giving us more than 15% ROCE, that is having a good balance sheet, means having less than 25% debt equity ratio, and the size of the company is decently good, means giving more than 200 crore rupees of net profit. So ultimate nature of the stock price is to go up. And we are finding a good support where the operator had started buying. So the same operator will start buying again. Otherwise, that operator will become in loss.
got it.
Right?
Thank you. Thanks a lot.
Yes, Mahesh Nath, please.
Hello,
Yes.
sir. I'm following you on YouTube since long time.
Mhm.
Recently, you uploaded the videos regarding the Indigo Paints and Reliance. So I bought it after seeing the video. But actually, I haven't applied those strategies today because now actually class is going on. So I want to ask you, should I remain in those stock
You
still?
should remain in all the stocks. Those are in your portfolio till the time we don't complete all the sessions.
Okay, I got it.
Right.
I'll apply after.
Because there are a lot more strategies, those we will be learning.
Yeah, okay. Thank you. I got it. Thank you.
Yes, Karni Singh, please.
Just two questions, sir. Number one is you mentioned, I think maybe my audio was not very good. That's why you mentioned V20, because to my understanding, there is V40, V40 next, and V200. So V20 is the top 20 of the V40?
No, V20 is the name of the strategy.
Oh, okay, sorry. Fine. Okay. Second question is, our whole fundamental analysis is based on the data what the company is posting.
Yes.
So how accurate, or are they 100% sure? Because there is maybe chances that companies are cooking books and not putting the exact data, and then we might be misled by the data what the company is.
So that's why we are taking the market leaders. That's why we are taking the market leaders. Because this is something where we need to have a trust. And there is no other way. We need to have a trust on the CA society, the community, the chartered accountants. There is no other way.
Yeah, okay.
Right? Yes, yes, Abha Kalsi, please.
Vivek bhai, I would like to know, how do you save the strategy in the trading view? Because I saw your video that you had posted of trading view 1 and 2, and I'm not able to save the strategy. Now, when I opened it again, when you gave the 5 minutes break, it had gone.
So you are not, you have not been able to save because you are not logged in. You have not logged in. You need to log in.
Okay. But I had logged in and I had, saved it. You get this little cloud kind of a thing on the side. I had saved it.
Then it will be saved.
Okay, I'll try again. I'll try it.
There must be some technical error only.
Okay. Another thing I want to ask you, Vivek, bhai, you do that, from one point to the other, you're taking the arrow up and it is showing how many days and what percentage. How
Have
do
you gone through the TradingView tutorial video that was shared in the group?
Yes.
Are you sure?
Yes, yes. But is it the two lines that are there, which you are, in the bottom bar, you have those two lines?
So for that, there are 3 videos on my channel.
I saw 2 that you posted on the WhatsApp group.
Okay. So please watch that carefully again. Okay. And still, if you have any question, then you have the WhatsApp number, and you can call directly to Aditya also. Okay. Right? And Aditya will help you out. He's a very nice guy.
Yes, thank you. Okay.
Okay.
Okay. Well, can I ask one more question,
yes,
which may not be related, but I had seen your videos and you had, in one of your YouTube videos, you had said about Adani stocks. And I wanted to have your views because I bought 2-3 Adani stocks. I bought Adani Enterprises, ports and power. You were talking more about ports and power.
I am bullish only on ports.
Okay.
Because of the low valuation. Okay. And I don't want to take risk on other Adani Group companies.
Okay. Okay. Thank you so much.
Yeah. Yes, Anurag.
So my question was that I saw your video that we apply RSI as well on the simple moving average strategies. But today when you were teaching, you did not tell that. So can you give light on that?
Yes. So the strategies, those have been discussed on YouTube video, could be entirely different. Those we are learning here. Right.
We should stick to this one.
You should stick to here where you have paid some money.
Right. Answer one. The second question is that how do we know which strategies to use? Like all are good, but
see,
how
so we will be learning total 8 strategies, 7 or 8, and it will become the see, we will be choosing based on the time availability, based on the compatibility of ours with the strategy. So someone might be liking V20 strategy, someone would be liking moving average strategy, someone would be liking Knoxville strategy. So it will entirely depends on you.
And one more question, sir. How to keep changing the settings for different strategies because when we save the strategy, for example, I have saved moving average strategy in TradingView.
We can have 3 indicators at a time.
Okay.
On TradingView free version. So one for Knoxville, second is for moving average, and there is no third one to save.
Right. Answer in Knoxville strategy. The endpoint is known when the start point is connected with the endpoint. After then,
endpoint and start point will appear at the same time.
Okay. After it is formed, that means
yes.
when it has found
at the time of forming. At the time of forming. Yes.
Okay, thank you.
Yeah. Saurabh bhai.
Hi. I wanted to know that when there is a buying opportunity, when the stocks comes down, it's general like all related to all 3 strategies. So how to know if that the downtrend is not because of any management decisions, anything happening around the world,
These
or
40
anything?
companies, Saurabh bhai, these 40 companies are the companies those have been in business for last more than 20 years. And being in 20 years, these have been the debt-free company, and these companies have been on the top position. So management issue doesn't come suddenly in these great companies because that is not the basic nature of these companies. So we don't need to worry about that. Not at all.
Because in the past we have seen many great companies going down.
So if Virat Kohli is playing on the field, so sometimes he will not be performing as good but we cannot expect that he will be taking money for fixing the match, or he will not be performing well every time. So this is how the business is done, based on the experience, trust, and understanding.
Okay, means we have to first study the business, then we should decide on the all the other stuff,
Exactly.
whether to apply the strategy or not.
Exactly. And even if, say, for example, over a period of, might be sometime any company get fail, then still we are investing only 3% in one stock, and maximum 6 and maximum 9. And
That is what
9%, when
we
we
have
will
to
be
invest.
investing 9%, it is not going to be zero immediately. So our entire portfolio is not going to wipe out.
Okay, that is a risk we are agreed to take on.
Yes.
Okay. Okay, thank you.
Manmohan ji. Yes,
Vivek ji, I'm not able to see you. Oh, you are there.
Yes, I'm.
First of all, thank you so much for guiding us for such a wonderful journey.
Thank you.
I was a person who always scared with the charts and everything, but after seeing your video, I got this confidence to see the charts. I always wanted to, but you gave me the confidence to get into this. So thank you so much for that.
Thank you.
I have two questions, sir. One is the V40 next. In how many months we have to review these companies?
Not very frequently. I have changed only 4 stocks during last 2 years. That's it. These are not the companies, those need to be changed every time. And whenever in future I'll be changing any stock, I will be updating you.
Perfect, sir. And the second question is, in simple moving average technique, if we miss the next morning,
price is available below the buying level, then we can still buy.
So in next to next day we can buy it.
Yes, of course. See, if mummy has made good gajar ka halwa, and on the same day we could not eat, and other kids have not eaten that up, and that is still available, we can eat again.
Correct. Thank you so much, sir. Thank you so much.
Thank you. Bharat bhai? Yes, you can. I can hear you.
Yeah, my question was on Knoxville. Like in the third strategy you had mentioned, we can maximum average it up to 3 times.
Yes.
But whereas in Knoxville, how many times can we average it?
We can average 2 times, because third time there is no such opportunity. These are V40 companies, so prices are not coming too much on the downside that we do get third opportunity as well. But in case of V20, because that is applicable on V200 companies, and V200 companies are not such big companies as V40, so there is a probability of price to come down further. That's why.
Okay, and one more question. Say, in case these strategies, will these strategies work 100%? Like, in case it is not completing, we are not getting an exit point for more than about 6 months, 8 months, or a year.
And we will be holding.
We will be holding. We will not
Yes,
exit.
we will be holding. We will not exit in a loss. So there's one thing that that is said by Warren Buffett ji, that there are 2 conditions to make money in the market. First condition is never to lose, and second condition is to remember condition number 1. So there are 2 rules to make money in the market. Rule number 1, don't lose money, and second rule is don't forget rule number 1. So what is that never lose money, don't lose money? It means to invest in good business, to invest in the big company of that business, and to buy that at a comfortable price. And if the price goes further down, don't sell. Sell only in profit.
Okay, and last question. Like I have, as of my current portfolio, we have a lot of companies which I'm facing around 30-40% losses. Should I exit and go into these strategies immediately?
No, we just need to apply these strategies on your portfolio. If strategies are being applied, then we need to exit on the target price. And if there is no strategy being applicable, and that is
then we'll have to wait.
Then we will have to wait. Yes.
Okay, done. Thank you.
Yes. Who else? Vignesh? Yes, please.
Yeah,
Good evening.
Yes.
Last two Diwalis I saw you.
Last
Wait,
two?
why are you here? Last two Diwalis before I saw it in Issue Test Bank. First
Yes.
video I saw you only, that video only. At that time you only tell increase the life in stock market class. No one tell that. In the last 2 years you are looking somewhat dull and very low energy. Now you are very energy and very looking bright. How? Because you only tell the increase the life.
See, when we make more money, then we are much worried about our lifestyle. Because if we have nothing in our life, then we have no interest in living more or living longer. But if we have a lot more purposes and we have got good money, then we want to live more also and to live healthy. So I'm taking care of my health. That's it.
Okay. And the
Right.
second question is,
yes, please.
Second question is, if we get in this year, I got 2 lakh profit in my trading.
Right.
Whether I have to pay tax or not.
See, this is something I would say we all must consult with the practicing CA. Even though I am from the same background, but I am not a practicing CA. So, because rules are changing anytime, every time. So, better is to consult with the CA. And if you have your CA, you should talk to them. And if you don't have your CA, then I can get you connected with my CA. So, I will be dropping the contact number of my CA in the WhatsApp group. You can talk to them. You can take consultancy from him. He is very reasonable and he's my cousin brother, so you can rely upon him.
Okay, thank you. The third question is out of the class. Which one is our next Diwali stuff?
I don't know myself which is the next Diwali stock. I don't know myself. Let's see.
Thank you.
Vivek bhai, can I?
Yes.
Firdosio.
Hello.
Am I audible?
Yes.
Yeah, Vivek bhai, it was a good session. Now, I just wanted to know, after we end our batch, we will be almost be having 7 to 8 strategies as mentioned by you.
Yeah.
So, how to scan for those strategies as regards finding a right buying opportunity? Actually, are we to scan it daily or any methodology you can suggest on that count?
This is very simple. We need to have 3 different watch lists: V40, V40 Next, and V200. I have shared a separate video how to create more watch lists.
Yeah, I've done that already. Yeah.
Right.
Yeah.
And when we are trading based on the simple moving average, we just need to apply that and we need to
do the down arrow part.
Keep on yes, going down with the down arrow.
So that you have to do. You suggest we do that daily.
We must do it on the daily basis. See, this is the love we need to create with the stock market.
Sure. Any apps which give us some prompt or something based on these?
Yes, there is an app that, and the app name is Anurag Koshal. Anurag Koshal is charging 10,000 rupees a year for giving you the prompt reply, and he will be working for you. Right. So if we are not getting even this much of time, we can get connected with any of the classmate and we can share a small amount with them, the young champ especially, and we can get this done.
Okay. Okay. My next question is, you mentioned selling or buying will occur next day after the condition is met in all our strategies.
Next in the morning. Next in the morning.
Now, what happens if supposing there is a gap down? If I'm selling, if I want to sell,
sometimes
is it
down.
So will it be based on GTT or whatever price is available at 9:15?
Whatever price is available. See, what will happen? Sometimes we will get 2% benefit. Sometimes we will get 2% loss.
Okay.
On an average, it will be 0 impact.
Okay. So as a thumb rule, 9:15, whatever price is available, we have to end our transaction.
Yes, exactly. Exactly.
Acha, Vivek bhai, based on your experience, considering all the 7 to 8 strategies you will be demonstrating to us, what are the number of trades on an average in a year you normally undertake actually?
See, I am basically taking trades on 3 times in 3 years strategy. My 90% money is invested based on 3 times in 3 years strategy that we will be learning on 5th day.
Acha. I did not get it. 3 times in 3 years meaning?
That is the name of the strategy.
Acha.
Okay, so
Okay.
so in a single shot, I do try to take at least 100% gain, or 200% gain, or 300% gain.
Okay.
As
So
I am
you,
invested in 5 paisa, I am not going to sell that before when means at least 10 times. I'll be getting at least 10 times gain, means 1000%.
so Vivek bhai, how to use this discretion actually? Because we need a guideline as regards. I just wanted to know
You will be
what is the
knowing it
maximum?
once,
Acha.
you will be knowing it once we will be completing all the sessions.
Okay, okay. And one more thing, Vivek bhai, do you advise a separate trading account, or is it wise to mix investment with trading actually?
So we need to have 2 accounts, one account for 3 times in 3 years strategy, and one account for all other strategies.
So then I will have to wait for when you wait till the date you explain that the strategy, I guess. Acha.
Exactly.
And Vivek bhai, my final question is, in my discussions, I've come across a viewpoint that if there are multiple trading entries noticed actually in our account, it may be interpreted as a business by the tax authorities actually.
No, it will never so happen. Till the time we are not trading intraday, till the time we are not doing F&O, it will never be considered as the business.
Vivek bhai, there are cases which are cited by those who have discussed as and when I have discussed. There are cases when taxman has used their logic and considered that to be a business.
No. There is a proper law for short-term capital gain tax, and short-term capital gain tax means if we are taking delivery of the trades and we are not holding it for more than 1 year.
What is the tax?
Because if it is considered as a business, then they extract 30% actually.
Then we will be moving to some other country. Yeah.
But Vivek bhai, just try to find out on this, because this is definitely,
See,
I'm not talking it.
I'm making money in stock market for last 18 years.
Okay.
And I am trading, I am investing, both the things I'm doing, and I have never paid income tax based on the business income. All the times I'm paying 15%, that is the short-term capital gain tax. And this short-term capital gain tax 15% came in force in 2018. Before this was only 10%.
Sure. Okay, but do give it a thought if possible, if you can discuss it in your
You can talk to my CA.
Okay.
Because tax related matters I don't bother about. Tax is being paid on the income only. Tax is being paid on the income only, and as Warren Buffett sir says again, no matter what, all the government of all the countries will keep on increasing taxes on everything, and we won't be able to do anything on that. So better is to focus on our income.
Hello.
Yes.
Hello. Hi, Vivek.
Hello,
May I
sir.
ask a question?
Yes, please.
So, Vivek, I was unable to understand this Knox-Wheeler divergence. One thing in that, if we are 2 downtrends, and the second downtrend is 5% lower, the end point of the second downtrend is 5% lower the first end point.
Yeah.
So how we will come to the conclusion that it is going to be down in the coming days?
No, see, if the second endpoint has been confirmed, then this is already confirmed.
So on the first endpoint, how we will get
We
confirmed
don't
that
know
it is
on the
good?
first day. We don't know on the first day. So we will be taking first trade on the first point. And if second point happens, then we will be averaging. And if second point doesn't happen, we will not be averaging.
So 3% in both the cases we can take.
3% plus 3%. If there are 2 trades and if there is no second trade, then only 3%.
All right. Got it.
Yeah.
Vivek sir, I had a question.
Yes, please.
So this question is also related to Knoxville divergence, and pardon me for being a complete beginner to this. So we were like in this strategy, you told that the length or the size of the line does not matter.
Yes.
The starting point also does not matter.
Yes.
So in this particular strategy, how is the downtrend and uptrend detected by the algorithm? Like
this is being detected
how is
based
it?
on the three parameters that 200, if we see the settings, then 200
Yeah.
bars back. Bars back are 200, RSI is 14 and momentum is 20.
Yeah.
So this is considering in its analysis last 200 days trading sessions.
Can you expand a bit more on what is bars back and momentum period?
Bars back means last 200 days trading
Yeah.
sessions. This Knoxville is considering for analysis.
Okay, and momentum period?
Momentum is 20 days. That it is trying to find out whether this stock has started taking a momentum in
Yeah.
last 20 days, means recently.
Yeah,
And
and
it
that
is taking the
momentum might be
RSI for
upwards or
14
down. Both.
and
Yeah.
it is taking the RSI for 14 days. So this is a combination of three things. Means 200-day moving average, 14 days RSI and 20 days momentum. This is a combination of three things.
Got it.
Yeah.
Thanks a lot. This is a bit of fun question.
No,
In
that's
all
fine.
the-
That's fine, Lakshya. We don't need to have doubts in our mind. We need to
No,
clear
no.
that.
This is another question.
Okay.
Like in all the strategies, and all the list, we take it V20, V40, V. Is it V for victory or is it V for Vivek?
This is V for Vivek, of course.
Hello, Vivek bhai. Yeah, in V20 strategy, once you said the second trade should be less than 10% than the first trade price, right?
Yes.
So suppose it gone up 20%, and I have taken when it got dipped below the 20%, and in between it didn't go up again, but it went below 10% again. So there I can take another averaging out. Can I average out?
No, we will be averaging only when there is a second range below that, and it
Okay.
is touching the lower line of the second range, and lower
Which
line
is
of the second range is at least 10% down from the lower line of the first range.
First range. Acha, got
Yes.
it. Thank you.
Okay.
Hello, sir.
Hello.
Hello.
Yes.
Hello.
Anyone, please. Yes.
Yeah. In V20 strategy, if we
Mhm.
select a range, then the lower the price enters the lower range and hits the target at upper range.
Yes.
And if the stock again comes at the lower range, is the entry still valid?
Yes, this is not valid. So this will be working like a paper cup. So if someone has already filled it with the coffee and finished it, then we will not be reusing it. We will be waiting for the fresh 20% movement of all green candles.
Okay. Thank you, sir.
Yeah. Yes. Yes.
Hello.
Abhay.
Yeah. Hi, this is Saurabh here. I have question on Knoxville divergence strategy.
Yes.
So, yeah, when we consider the downtrend line connecting bottom to bottom, so does that represent the end point? Does that represent end of downtrend?
Yes, that is representing the end of downtrend because of two things. That RSI is in the oversold mode. So this is already down a lot. And second, momentum has been seen in last 20 days. So it means after coming to the oversold position, the stock price is trying to go up immediately now with a jump up. So that's why it is seen as the end of the downtrend.
So in the next day, when we considering the buying position, do we need to consider the volume?
No, nothing.
Not required.
No.
Volume of trade happening in the next day, not required.
No.
Okay, thank you.
Right?
Hi, Vivek.
Hi.
Yes, Abhaji.
Hi,
please.
my name is.
Sir, can you explain the point of GTT again that you were trying to explain?
GTT means we will be placing the order today to be executed at any time whenever the price will hit the target price.
I understand, but in our strategy, how does it work?
So we know in case of V20 what is going to be the target price. So after buying, we just need to place the sell order under GTT. So so that we don't have to having a look at the chart every time whether target has been hit or not.
So you mean the target is at 20. How? I didn't get it.
We know the target. Target is the upper line of the range.
Oh, okay.
Okay.
Okay, got it.
Yes, Venkatesh bhai.
Sir, actually, should we need to apply these strategies or actually check the what do you call chart on a daily basis in the evening?
Better is to check the charts on daily basis in the evening.
Because we have 3-4 strategies. It is better that after closing hours of the day, that we can apply in the evening and check whether it is coming to our range, whether should we need to buy.
Of course, at the day end only we should check.
Okay, so we need to apply for all these companies. We can check where it is going to hit.
Sir, 100 crore kamana hai. We need to make 100 crore. So,
Yeah,
so let's spend some time on that.
Absolutely.
Right, sir? Yes.
Yeah.
Hi, I am Rohan.
Yes, Rohan.
Yes, so some time ago you told that example about not drinking coffee from the same filter cup for V20 strategy. Can
Yes.
you please explain it again? I did not
Explain means,
understand what you meant.
So if we have bought something based on a range, the price has come down on the first range, and it has gone up again. And
Can you share the chart? Can you share the chart and explain it will be better?
Yes, please. So, for example, let's open the same chart. Bajaj Auto.
Angel One or Bajaj Holdings.
Bajaj Auto, yes. So when we have seen there is a movement of more than 20% here, right?
Right.
And the price came down to here. We bought it here. We sold it here. So after selling, when the price has come down again back to the lower line, so this is not relevant because we have not seen a fresh 20% up move.
Okay.
So this first fresh 20% up move is over now after hitting the target.
Okay.
We need to have a fresh up move for taking one more.
Okay. I have a similar question.
Yes.
Can you please open the chart of Jyoti resins and adhesives?
Jyoti resins.
There is a live
Okay.
adhesives. Yeah, there is a live example there on 25th August.
Okay. Is it the part of V200 companies?
No, I have not checked.
Yeah, so first we need to check that.
Okay. Because it's a good company. It's a
No.
market
Even
leader.
if this is a good company, but still it should need it needs to fulfill all the conditions to become a part of it.
Okay, I will check. But can I just ask for example sake?
Yeah. This is fine. There is a V20 movement, and
Yes,
the buying price is this one.
Yeah, so there is one more V20 movement on 25th August to 1st of September.
Yes, there is one more. Yes.
Right. So between this first movement and second movement, there is only one fine line. Now, what these operators, they are very notorious. So
Operate is consistently taking the prices higher.
okay, so now at the bottom of this big green candle, which was day before yesterday, now if from the bottom of the this point, if it rises 20% up again, say for example,
so one more 20% movement will be created.
But then when do we buy? So for example,
we will
if
be
we
buying
buy
on the lower line. We will be buying on the lower line of the range.
And the upper means lower line of the upper range, should we buy if it cross now?
Brother, we need to buy at the lower line of the range, and we need to sell at the upper line of the range. This is so simple.
No, yeah, that I understand. So there are two ranges presently. So
at any point of time, price will hit the lower line of one range.
Right.
We will buy there. And if we be coming down to the lower range and lower line, and the gap is more than 10%, we will be buying that also.
Okay.
We just need to go through the video again, this session video again, and we need to note down all the points and we need to revise that. Then only it will become the part of our subconscious mind. We need
Right.
to do practice for this.
Yes, that's right.
Right? Yeah.
Hello, Vivek bhai.
Yes, bhai.
Actually, I am a subscriber to your channel for last 2 years now,
Right,
and
bhai.
I remember you giving the Diwali Muhurat trading call last year,
Yes, bhai.
which was Mirza International,
Yes, bhai.
and which is I am still holding it, and it is almost 400% now, almost 400.
Congratulations, bhai. Congratulations.
No, it's all your credit. Credit goes to you.
No, credit
Yeah,
goes to you,
but
bhai. You patiently hold it this for a long time.
yes, yes. So my question is only one. See, I have got a portfolio, and where I have got 5% allocation to all the shares in my portfolio.
Okay.
So is it okay? Is it okay? Because you have said 3%.
So far this is okay, but again, in our portfolio, in our existing portfolio, we need to apply all the strategies and we need to bifurcate all the shares in 3 parts, as I have already told.
Yes.
Yeah, so this is
But
going to be simple.
yeah, it will be from here onwards. But
Yes.
right now that I have, should I be okay with it?
Right now, you should not do any change. You should not make any
No.
change in the existing
Yes,
portfolio.
yes.
Let's
Yes,
wait
yes.
to complete all the sessions.
Okay. Thank you.
Market is in bull run. There is nothing to lose currently. There is no hurry.
Thank you. Thanks a lot.
Abhaji, please unmute yourself.
Sorry.
Yes.
Vivek bhai, you also sent us an Excel, which was explaining the CAGR and
Yes.
all of that.
Yeah.
So when will you explain a little bit on that? Because, there was one with the trading, this thing.
We will explain in the last session. You just need to remind me.
Okay.
Right? Yeah. Any other question, please? Anyone?
Vivek bhai, this Upstock is also having GTT by any chance?
I think all of the discount brokers have the option to place GTT now.
Okay.
Sir, good evening, sir.
Yes, bhai.
Sir, it's Gurinder here.
Haji.
Sir, I'm totally new beginner to this field.
ये अच्छी बात है. You have nothing to forget.
Sir, I am trying my best, but still not able to get some points of your video. Sir, what fundamentals should I go that I will also excel in this field? Because
See,
by
those
watching
are
today's
just new in this stock market. I will suggest everyone to go through the Varsity, Zerodha Varsity. So this is varsity.zerodha.com.
Sir.
Let's search this one. Varsity Zerodha. Okay, zerodha.com/varsity. And here there are all the modules in Hindi as well as in English. So what is the stock market? All theoretical concepts are cleared here. Who are the regulators? What is the financial intermediaries and IPO part 1, part 2, stock market, index, jargons, terminals, process, everything. You just need to go through everything. All theoretical points will be clear.
Right, sir.
Yes.
So one more question.
Yes, please.
Sir, like I am new to the stock market, just 1 year, I'm just doing my own thing. So this is the first professional course that I have taken. So I want to know, like, I have made certain investments in certain stocks. Now, when I'm seeing your video, I'm confused that, some of the things are maybe the stocks are not okay or okay, I don't know. So what to do like this?
So you just need to apply all these strategies on your portfolio as well. If the strategy is being applicable, then need to exit at the target price. If no strategy is being applicable, then we need to see if this is in profit. If that is in profit, we need to exit immediately. And if that is not in profit, then we need to wait for our price to come.
Sir, do you believe in long-term holding? Because, you know, what happens is we start we think long-term, then we see that
I
it's
had
gone up, we
explained day
don't
before
sell.
yesterday. I had explained day before yesterday. If we are making 20% for 20 years, we are making 38 times. And if we are making 40% for 20 years, we are making 838 times.
So you don't suggest at all long-term.
I'm a baniya. Right. So I need to make more money. It's so simple.
Yes.
I have no emotions as far as money is concerned. I am a robot. As means till the time money is concerned, I am a robot. No emotions. Only respect, love,
It's
and
so difficult, sir, but it is so difficult, no? Because it's damn confusing for new people. You are so experienced, so that's why.
So that's why I'm saying wherever you are making more money, just stay with that. These stocks are not our kids. These stocks are the material lying in our shop for selling only. No attachment. No attachment. These are not the kids.
Sir, but you hear stories about somebody gifted HDFC stock, 20 years, people kept it. You know, Motilal Oswal, all these people.
They made only 20% CAGR. They made only 20% CAGR. But to make 30-40% CAGR, we need to trade. As I told, these are lazy people. So, see, try to understand. If you have 500 crore rupees, would you bother to open your screen every day and trade when you have 500 crore rupees? So people become lazy. Once they get more than what they need, they become lazy. But person like Vivek Singhal will never become lazy. Because the money I need is not a small amount. That might be $100 billion or $200 billion or $500 billion. See,
Also,
there's
sir,
nothing.
we are not so young. You know, like a person like me is 54.
You are quite young.
I'm 54.
So you have 50 more years to live. 40 more years at least. Start chanting Mahamrityunjaya mantra and increase your life. Just start chanting. Means to live up to 98, 9900 is not difficult. There is a process. And the process is stop eating junk food. Stop eating biscuit. Stop eating namkeen, snacks. And drink at least 3 to 4 liters of water every day. We need to walk every day. And we need to chant every day. And we need to stop cribbing. We need to stop talking about others. We need to flourish love. We need to have peace in our mind. And we will be living 100 years, till 100 years with a healthy body. There's a process. There is a process for everything. This whole universe is a science with calculations. Nothing is happening suddenly. Nothing.
Like you said in your first video, you know, it is so true that a newbie like me, you know, you would sit for hours in front of the TV to watch, you know, the news, what is happening, and get totally disturbed and, you know, buy this, sell this with the news. But like you've suggested, one should not be doing that.
Of course not.
Sir, excuse me. Sir, how you are maintaining balance between your family life and business life? You are so much dedicated, sir. Sir, you are so much dedicated.
I am
You are
dedicated towards my family also.
Sir, you
So
are really
I am dedicated towards my responsibilities. If that responsibility is about making money, or if that is a responsibility towards my family or towards my friends, I am dedicated towards my responsibilities. Wherever I am finding that this is my responsibility to complete that task, I am there always. Yes, Karni bhai.
Yeah, just about the V20 strategy, slight confusion. Is that okay? We created a range as per the 20% movement, and we buy at the bottom of the range, And now when do we average? When we average, when the price falls 10% further from it, or when we buy when the second opportunity comes, which is 10% from the first.
Yes, exactly. The later one. Yes. Yes, Anurag.
So kindly, if you can elaborate a bit, how can we deploy 20,000 every month so that we can, get Kager?
How can we, sorry?
Deploy 20,000 per month.
Yes, so deploying 20,000 per month means we need to have at least 10,000 rupees invested in one stock. So if we are investing, if we are starting investing today and we have only 20,000 rupees, so we will have money only for 2 trades. But in next month, when we will invest 20,000 more, we will have money for 4 trades. And after, in the third month, we will have money for 6 trades. And going forward, just after completing almost 16 months, we will be having money for 3% in each stock.
That mistakes I have already committed, that I have enough to start trading in others.
Sorry, I didn't get your voice.
Got it, sir. Got it.
Got it? You got it? Right. Yeah.
Vivek bhai, what is a good amount to start trading?
50 crore at least. So
No,
when
if we had that kind of money, we wouldn't be in this.
when we can start with 20,000 only, then we can start with any money. See, it depends on the availability of fund with us.
So if we have like lump sum, if we have like say 10 lakhs, supposing. So we should start with 10 immediately?
Yes, exactly. Why
Even as a newbie?
After learning, you are not a newbie.
Oh. Matlab, we should be so confident.
If you have confidence in me,
yeah, that I have.
Then go ahead and start. Yes.
Next. Hi. Can I ask? I'm Rohan.
Yes, Rohan bhai.
Yes. So this is not means directly related to today's session, but how likely is it? Do you think that the market will hit fresh all-time high by March 2023? Do you think means in terms of probability?
See, first of all, it doesn't make any difference if the market will be hitting lifetime high before March 23 or not. First of all, it doesn't make any difference. Second, probability is very high. Probability is very high because last 1 year, market has not done anything since last October till now. And in any scenario, Indian market has not been in downtrend for more than 1 year. So Indian market currently is waiting only for that US market just make a bottom and it stop going further down, and that's it. And US market has already made a bottom.
Okay. And second question is related to, you are into this business for a very long time, and I had also seen in one of your YouTube videos that you used to work somewhere where in corporate finance previously.
Yes.
So I'm a small businessman, and I usually have high working capital requirement whenever it is available, say 30 lakh, 40 lakh, and I get a window of 4 months, sometimes 8 months, wherein I cannot deploy that money anywhere because I am expecting new orders in the say 4 months. So in such scenario,
we should never invest anything that we cannot invest for 3 years.
Okay. So it is highly risky if we do that.
Of course.
Okay.
Of course.
In current scenario?
No. See, if someone had invested last year in October for 6 months, 7 months, he must have been exiting with a loss.
Okay. Right.
We don't know when the down cycle will start.
Okay, means it can start even now also, then we should be ready
it will
to hold.
Not start now. It will not start now after completing 1 year, but still for the sake of discipline and so that we can continue with the discipline and methodology and principles for rest of the life, we should never invest anything that we need before 3 years.
Okay.
Cycle doesn't
And
last 3 years? Is that why you say?
Sorry?
You say this because a cycle does not last for more than 3 years?
No, because of the human mind. If the market will go down and you need to withdraw that after 6 months, you will be having a headache every day. What will happen if it doesn't come up within 6 months? What will happen if it doesn't come up within 7 months, 8 months? So we are here in the market for making our life better, not to make our life worse.
Yeah, miserable. Right.
Exactly.
Okay. And if any time a market is in sideways movement for a year or so, then that time we can take some chance, but we should never go
Why
all
to
in
take a
type
chance?
of.
Why to have a greed?
Okay.
Why
Because
to
material inflation, sir, the steel prices and everything, they keep on going up
please
in
keep
bank.
both the businesses separately.
Okay.
The capital of one business should never be invested in another business.
Okay.
Because Anil Ambani had done the same mistake. He had invested one business money in another business and everything collapsed.
Okay.
Vivek bhai, should we be keeping some percentage of money in cash for
We should
situations
keep,
like 2020?
No. We should keep only 3 months expenses in our bank account. Everything else should be invested in the market. Yes, 3 months expenses in the bank account. Everything else should be invested in the market.
So for newbies also, you're saying this. We have like FDs and all. I know it doesn't beat inflation and all of that, but we feel scared, no?
Okay, whenever you feel comfortable, then you can start then. I will not force.
How will I manage my 4th month if something like 2020 happens again?
See, there will be a lot of time when there will be a lot of opportunities and we don't have money because we are already invested. So we need to remain invested every time when opportunity is there. And if there is no opportunity, we will not be invested. And at the end of the last session, we will be talking about that which strategy we should use, how many strategies we should use, and in which group we should work upon. So first of all, let's learn all the strategies, and then we will be moving on that topic that after learning all the strategies, how to implement that for rest of the day.
So you will keep helping us along the way, no? You will give us some advice, do this is this strategies for these stocks.
But you told me you are 50 plus. You are not a kid.
No, but this is new for me.
So that's why you're learning. You just need to go through all the videos again. You just need to make your notes. You just need to follow them. That's it. And if you have any doubt in understanding these learnings, then you have the contact number. Right? Don't try to feel like that you are new. It doesn't make any difference. It doesn't make any difference. You just need to practice and you just need to follow. That's it. And for any doubt, I am there. For any doubt, I am there.
Newcomers make more money.
Newcomers seriously makes more money because they don't have anything to forget.
Any baggage. They don't have any baggage.
Yeah. That is a nicely plain plot. You can have any building. And if you already have a very old Haveli, then you need to destroy that first.
Yeah.
Now you are happy. Yes, next question, please. Vivek bhai, yes, please. Vivek sir.
Vivek, I just want to know that, today we have discussed 3 strategies.
Yes.
And now we have got a set of group of companies to apply it on, B40, sometime all the 3 groups and all that.
Yes.
Is there any easier way? I think somebody else also asked this question earlier, to know that if any of the company is coming up for us to buy.
See, it will take only 15 minutes every day, Vivek bhai. And you will be lucky that. Only 15 minutes a day. That's it.
Okay.
In finding the new opportunities, it will take only 15 minutes a day. And you can set a routine that after having dinner, you will start searching for the charts, and within 15-20 minutes, you will finish your job.
Yeah, but pardon my ignorance, but I'm just trying to figure out that, do you need to put some kind of screen and screener to find?
There is no way to automate everything. While automating everything, we are sometimes losing big opportunities and sometimes we are making a mistake.
So you mean that I have to go through each and every company of V40, V200 to
No.
figure out that?
V40 and V40 next chart, that's it. It doesn't
No,
take much time.
This strategy 3 of V20,
It doesn't
we
take
can
much
apply
time.
on.
It doesn't take much time. V200 charts you can go through on weekly basis, and V40 and V40 next you can go through on daily basis.
Okay.
Vivek bhai, all the strategies that you tell us, we have to, all the V40 stocks or all the 7-8 strategies we have to check. Like that?
We have to check only if we have money to invest. If we are already 100% invested, we don't need to check.
Hey, but to practice, to see if we are thinking correct.
Yes, so for doing practice, the more is better. The more is better.
I will set normal.
Any other question if we have? Otherwise, we are good for the day. You are mute. Please unmute yourself.
One more question. You know, you mentioned this death trap, was it?
Death
trap. Huh. So that is, I saw one video on Reliance Industries is this. So what is your opinion on this?
I have already told you that death cross is not working.
So if I have Reliance Industries, which I have some shares, so I should just stick with it.
You just need to follow the strategies those you are learning in these sessions. That's it. So simple.
So we have to wait for a few more days, not till end of October.
Yes.
What if something happens to us before that? Our stocks.
Market is in a bull run, nothing wrong will happen.
Okay. God bless you.
Thank you. Thank you.
विवेक भाई थोड़ा tangential पे जा रहा हूँ. Any comments on US market? आजकल there is a fad about investing.
There is a good opportunity. There is a good opportunity to invest in US market, and the best method is to buy Nasdaq 100 ETF that has been launched by Motilal Oswal.
अच्छा. What about that in money platform? Any idea? उसका कुछ
There is no need to pay more taxes.
अच्छा. What did you? Can you please repeat? Motilal Oswal का which instrument?
Motilal Oswal Nasdaq 100 ETF.
Okay.
How do you buy?
Just like the mutual funds, or just like the stocks? Not like mutual fund, just like stock.
On the Zerodha, you can buy it?
On the Zerodha itself.
Okay.
Vivek sir, I had a doubt. It's not a doubt, it's more of your comment on what I'm saying. I am kind of heavily invested in cryptocurrencies also, and I'm doing okay.
Just exit.
What is your opinion on?
No question, no second thought. Even if you are in a minor loss, just exit. We are not here for gambling. We are here for business.
Yeah, but see, what I am expecting an opinion.
Whatever expectation is, all that is going to be false.
What is the
Nobody is going to make money in crypto. Finally, all cryptocurrencies have been launched just to sell that to the retail investors. That's it. Technology will be there. Technology will be used by various industries, but these cryptocurrencies will be no more anymore.
Why? I want to know.
Because there is no underlying asset.
Okay.
There's no underlying asset.
Okay.
Right?
Hello, boy.
Every stock has an underlying asset. That has a company, that has a factory, that has a land. But crypto doesn't have anything.
Okay. Cool.
That's why.
Right, boy.
Yes, bhai.
I want to thank you for introducing Babylon book and richest man in the Babylon, and I read it through Kuku from yesterday. Very nice to hear. I can understand my what I have to do. 10% investment in every month is very easy. Very nice book.
We have to invest at least going forward 1/3 of our monthly income in the market.
Well, we'll try.
Yes, we need to try actually. It will not happen overnight. It will take some time, but our ultimate goal should be to invest 1/3 of our monthly income in stock market.
Yeah. Yeah. I already made a call to you. I took a housing loan and put in the market because housing loan interest is very low
Don't
for
take
me.
any kind of loan. Don't take any kind of loan. Not
Yeah,
today,
that is
not tomorrow.
okay.
And if you have already taken a loan, then don't try to repay in advance.
No,
Then let
no,
it
that
continue.
was
Yes.
no,
Don't
that
take
was
any kind of loan. Loan is bad.
thank you.
Vivek bhai, it's Ravi here.
Yes, Ravi. Shakal to
Can we
dikha
apply?
yaar.
Can we apply uh, more than one strategy on a single trade?
Actually, we should not try to apply or to take trade based on more than one strategy on one trade. We should not.
Okay.
Like by last class, you are told, second class onwards you can learn how to earn. So these three strategies we can apply tomorrow itself.
Sorry, I didn't get you, Vignesh bhai. Please say again.
First class you are told, from next class onwards you can learn how to earn. In first class you told no, finally. So shall we use these three strategies tomorrow itself, or shall we wait for the entire class?
Yes. See, based on these three strategies, you can take trade tomorrow itself. But for selling anything out of your portfolio, you must wait for all the classes.
Yeah, okay. I will do just a paper trade.
Yeah, hi. This is Saurabh here. So wanted to. Actually, I forgot the question.
You forgot the question?
Yeah. I recall it. So
I'm not Devanand.
Yeah. So you're also covering topics on analysis, like business analysis also. So when it will be end? So before that, anything you want us to like prepare something, go through something?
See, for understanding business, we need to keep on asking questions from Google, Baba. From Google. Right.
Okay.
Learning about the business means if we keep on asking questions from Google, then we will keep on learning about the businesses. And to learn the business, the best source is to keep on listening to the CEOs of those companies. So for example, I go to YouTube and I search for Anand Mahindra interview. So Anand Mahindra in his interview will only be talking about the automobile business. And
No. I think that was not my question. There are two kind of the technical analysis and business analysis.
Yes.
In that part, I was asking.
Business analysis means the understanding of the business only.
Okay, not the
Yeah.
terminologies, how to read the
No.
balance sheet. That's all not.
That is the fundamental analysis.
Okay.
And for fundamental analysis, we will have a separate session. That is the 4th day.
Okay. Do you want us to be prepared or go through something?
Nothing. You
Not
just need to
required.
be available here. That's it.
Okay. Complete black with a fresh mind.
Yes.
Okay.
Sir,
Any news or articles or anything we have to read? Any newspapers like
You
news
need to watch the first video again. In that first video, in the first sentence I had said, no TV. Okay.
No business magazine, no nothing. No
I have
business today.
I see, whenever I will be speaking something first time or one time, I'll be repeating the same sentence 100 times. Nobody can change my mindset. Nobody can change. Because whatever I'm sharing with you, that is based on the experience.
Vivek bhai, one personal question from you, if you want to answer. is that barring this, ye jo 2020 ka crash and this thing, how soon were you able to make from 0 to 100 crores? Like some of your videos you have.
It depends on the amount you are going to invest. Of course, it depends on the amount you are going to invest. If
In your
someone is investing 90 crore rupees, then he can make 100 crore within 6 months.
No, in your case, I'm asking.
See, first of all, so far I have not made 100 crores. My money is almost 70, 75. And I started investing in the year 2004. So it has been 18 years. But 75 and 100, there's not such a big difference. It can happen within 1 year also.
Yes.
So it took 18 years to make first 100, but for another 100, it will take only 2 years. And that is the beauty of compounding. And for third 100, it might be taking only 1 year, having 50% gain. That's it. Right?
Yeah, right.
Yeah.
Thank you for sharing.
Vivek sir, I think it's about time, and I just wanted to say one thing. I won't say these are lectures as per se, but these conversations with you are extremely gripping. And for last 3 hours, I'm not seeing my mobile or seeing here and there. It's
So
like
you wanted to see the mobile in between the classes?
I did not wanted to, but like in other things, my concentration is not more than 25 or 30 minutes. And over here, it's 3
To
hours.
improve the concentration, reading the books means to start your day with reading the books is the best way.
Okay.
We must start our day with 1 hour of reading any important book. Any important books means something that is teaching us time management, money management, human behavior, or anything like this.
Yeah. During my CAT prep, I used to read a lot, but lately I have just stopped reading anything.
Now
But
you have, now you have grown up, huh?
not
And you have stopped doing every good thing. Why
no,
so?
no, not really. I really want to take up all the 10 books you have shared with me.
Yes.
Shared with all of us.
Start reading in the morning. You have the advantage with you because you are young. Right. See, I am 40 now.
Yeah.
And someone who is 22 is 18 years ahead of us.
Yeah.
Right.
Yeah, I totally get it. And
You have to make use of that.
Yeah.
Yes.
Thank you.
Vivek bhai, do you believe in diversification of different assets like in real estate and then mutual funds and then stocks, or is it all in stocks?
See, when we are investing in at least 20 different companies, so we are already diversified. We are considering this stock market as a one basket, but this is not one basket. We are investing in different stocks. So if we are invested in Bata, we are invested in Relaxo, we are invested in Page Industries, along with this Reliance Industries and banks and HDFC AMC, HDFC Life, we are invested in different categories itself. So one business, if collapsing, it doesn't mean that another business will also collapse. We are already diversified, Sunny Bhai. So let me
Vivek bhai, you are
as
not
far
much
as,
of a debt fan actually, I gather.
So there's no need to go for the debt instruments.
Achha. Okay.
Why to be happy with 8% when we can make 25-30%?
There is a philosophy that debt equity 50-50 hona chahiye वगैरह
That
वगैरह.
philosophy is made by someone who is very conservative and someone who doesn't understand the stock trading.
Achha. Okay, so you're not much of a debt instrument fan.
Much of the debt what means I am not at all. So my 100% money is in stocks. Other than my stock portfolio, I have one house I'm living in, and that's it.
Okay.
Vivek bhai, any year you have made loss in your portfolio in any year?
So far in my career, I have booked loss only in one stock in 2009, and that stock name is AdLabs, Anil Ambani Group company, and that's it. Since then, so far, I have never sold anything in loss. I am very blessed guy.
No, I want to ask you, like you said, it's an average of so many years, no? You can make 20% one time, you can make 40 one time. So you can also make, I mean, you can also go into minus one time.
It does also happen actually.
It doesn't.
Vivek, I think in many ways, you and me have similarities. Our names are same. Our risk appetite is same. I'm also invested completely in stocks, though just from the last 2 years only. And I also have a house. The only difference being that I don't stay in that house. You do stay in yours. So this was a question which I thought I'll take up personally with you, but now I think maybe for the benefit of others, I thought I'll ask here. Do you think that it's worth keeping that house, which is giving me an ROI of not more than 2% per annum?
See, one house creates safety for family members, and one house creates respect. And when we have sufficient money and we are not getting respect because we are living in a rental house, for being practical, that keep on bothering our subconscious mind and active mind. That doesn't let us feel good. So this is one thing. See, if till the time we will be living in rental property, even though we will make more money, but still this question will always be in our mind. Kabhi to le lein. We need to buy, we need to buy, we have to buy. Just to get ourselves free from that, we need to buy.
Yeah, but then you're right, but I never stayed in that house, and I stay in a different city. I stay in Goa, and house is in Bombay.
Oh, that's okay. That's
and very unlikely I'll ever go over there. So
see, keeping one house will make your mental state in a state.
it gives you some peace of mind, and
yes,
yeah.
yes. So anything happens anytime, you can go to your home and you can live there.
That's right.
We must have. Yeah.
Thanks a lot. It was very informative.
Thank you.
I think
Thank you.
exceeded the time.
Thank you, everyone. And if you still have any question, then definitely WhatsApp number is there with you. Yes,
Vivek
please.
bhai, this Zerodha Pay portfolio, it gives us the summation, so much percent profit in Zerodha, total portfolio ke upar. That is CAGR. By any chance, you know anything about that? Is that CAGR?
No. We can calculate the CAGR ourselves. This is a very simple calculation. I have shared one.
आपने sheets दिया है, but okay.
उसमें maintain करो ना. That is better.
Okay. That we will have a session on that, na? You mentioned.
Yes, I will explain that sheet.
Okay, thanks.
विवेक सर का एक वो भी YouTube वीडियो भी है ना? You can
YouTube
refer to
video
that also.
Yes,
Yeah.
but still we will discuss on the last day.
Yep.
Okay.
Thank you. Good night.
Thank you, everyone. Good night.
Thank you.
Good
Good
night.
night.
Patient.
Thank you.
Thank you. Good night.
Good night, everyone. Bye bye. Thank you.
Thank you.
Bye.
Good night, bhai.